Welcome back to the channel. So when an asset starts reacting and acting like a liability, we are obviously talking about real estate and maybe some other assets, because even buying a car nowadays feels like, buying a house back in the day, right? Like everything is becoming expensive. But why I want to make this video is because of one comment on my channel, and I do appreciate all of you guys. I do read all of my comments. But the comment said, like, look, when you own real estate, you can always pull out and you can always have that safety net. And then I thought about that for a second. I thought about that for actually a few days. Like, I was just trying to analyze what they actually meant by that. So what I'm assuming they meant is, like, when you own and when you have equity, right, in a property or real estate, you are able to pull that equity via line of credit, HELOC, etc., right? So even if you are lacking some funds, you are able to kind of have your own private bank with your own equity, right? So I think that's what they meant. So I kind of went in deeper, and then I realized there are probably two types of owners, right? Like, I knew it all along, but now it's like, like we have these real estate owners from the 60s, 70s, 80s, 90s, or whatever, right? And even the early 2000s. And then you have the owners that just started, right? Like, 20 and up, I would say, right? So that's a completely different ball game, right? Because the actual current situation showed us that, just because you own real estate doesn't mean that you will have equity, right? So many people had negative equity, buying these condominiums, buying homes recently throughout the peak and all of that stuff. So it doesn't really apply, right? And it doesn't mean because you have a real estate portfolio that a bank will favor you, or that they will give you more money, because they also have to protect their interests, right? And they have to protect the way how they give you money, right? So if you're kind of upside down or negative cash flow or negative equity, there's really no money. So that asset could be a huge liability. So I just wanted to point that out. So I have a couple of points that I would touch, and five questions towards the end. So let's get right into it. Real estate used to create security. Now it creates monthly stress. And more talking to people, I feel that that's exactly what's happening, right? Like, I remember, 2-3 decades ago, like, people were stressed out, obviously, right? Like, they have a mortgage, they have a payment, but it wasn't like this, right? Like, every quarter, people are talking where the interest rates are heading and what's happening, and all the uncertainty and all the stress, the added stress and tariffs and this and that, right? So it feels like the majority of people are kind of focused towards that aspect, even though they own, but it feels like that they're scared almost owning it. So I don't know, that's just my perspective. Ownership no longer equals stability when costs rise faster than income. Yeah, so I mentioned that many times in my previous videos. So we had that golden era, that 2 decades of solid, growth and Canadian bulletproof real estate market that seemed like it will never be defeated, right? And then all of a sudden, overnight, it happened, and it kind of, got defeated, right? Because we have seen that the prices are declining from 2022. So that's a fact. Like, nobody's making this stuff up. Yes, I agree with you that, in some parts and some communities and some areas are more stable and the declines were less, right? But in some communities or suburbs are more significant. So we can agree on that, but it is what it is. So carrying costs, mortgage, taxes, fees, insurance keep increasing even when prices don't. Well, that just seems to be it's just a given, right? Like, taxes will grow. I have mentioned that, the actual tax assessment was in 2016. And now we're like heading into 2026. So that could be a huge impact and huge change, right? And even, the mayor in Toronto mayor announced that they will need more money for the city of Toronto. So what does that mean? In short, it means more taxes for owners or for Torontonians, let me call it that way. Liquidity is gone. Selling takes months, sometimes years. So, like if you have majority of the chips kind of sitting in that one basket, let's call it a house, it might take longer than anticipated, expected, or you might have to take a bigger and cut or hit in order to get rid of the property. So things are not as easy cut as people are saying it is. I know you probably saw in your neighborhood some sold signs and whatnot, right? But the question is, what did it take for that property to actually be sold? Did they had to take a huge haircut? Did they lose money? Who was selling? The people that bought in the 70s and they're selling today, I guess to them, it doesn't really matter. If somebody that bought it in 2021 and it's selling today, they're probably 1,000% losing a lot of money, right? So it all depends. Each case is completely separate and individual and unique. Many owners are paper rich, but cash flow poor. Yeah, so a huge example is obviously the condominium market. It will trickle down obviously to other parts of real estate types. Many are not kind of, how would I say, they're not kind of looking at it. But look, student housing, students are gone, right? There's so many rooms available nowadays, right? So then you have investors that are gone, right? So nobody is investing in big or small projects or any type of those flips, right? So we cannot kind of eliminate those small flippers. I'm sure, 5-10 years ago, you have seen these, folks that, bought a house every few years and they were flipping it and making maybe money or not, but most likely they were making money, right? Because of the growth of the property on its own. So those are gone too. I don't remember last time when I spoke to someone just out of the blue and they said, nah, you know what, I'm just gonna buy this property, gonna paint a couple of walls, fix and sell it for profit. It almost I don't know if that even exists anymore, right? So let's go to the next statement. Renewals, not purchases, are becoming the biggest financial shock. So the renewals, we will have 2 million renewals in 2026 and 2027, the biggest one on the graph, and a lot of Canadians will be obviously impacted, and to some, it could be only $500, to some only $1,000, and it might not be significant, but if you add everything else and you combine that increase and you multiply it by everything else that got increased, now all of a sudden you can get into a territory of many, many, many thousands of dollars per month, and most people will not be able to generate that cash flow equity, out of the blue, right? So job insecurity makes long-term fixed obligations far riskier. Yes, I mean, I know the people that obviously retired now, from the 80s and the 90s and whatnot, They told me many times, look, I got employed in Ford, and that's all I had to do is just to get into Ford. And I knew that my future will be stable because I will retire and that's it, right? So I do not know one career or a job that I can say from this point of view, that will be secure, right? I know a lot of people are making fun of AI and it's not there yet and whatnot, and I can agree with you, right? But the growth of artificial intelligence is incredible. That's next level. So will it replace everybody? Absolutely not, right? But can it replace most people? I think so, and it will replace it quicker than you can blink. So I don't know. So I think the job insecurity, especially today with everything that's going on locally and internationally, globally, however you want to call it, it's a lot of tippy-toeing, right? So that doesn't create stability for sure. Holding used to buy time, now it extends exposure. So this is huge, right? And I hear it even today. I heard it in 2023, when this ship started to sink. I mentioned I called it in 2020, right? Not only me, I'm not saying me, many like me, right? Or maybe a portion of people called it out and said, hey, look, this type of behavior in the market cannot bring anything good right down the road. It's bringing us good now, but eventually it will all come down like dominoes. So anyways, in 2023, that mindset, I'll just hold a little bit longer, and with holding a little bit longer, it automatically will kind of give me more benefits because it will bounce back. And then we went into 2024, obviously did not bounce back, and then we're sitting in 2025, and I think now people are slowly realizing, right, that they're like, oh my gosh, this is not something that will just bounce back, right? So 2026, I personally believe that it will be worse than 2025 because of so many things. Mortgage renewals, there's going to be way more inventory. There are no more heavy pocket buyers out there. Nobody is willing to expose themselves to such risks, right? Because people are looking at the future and they're like, we don't know which directions this is going. So I think it applies so many brakes on so many levels. So therefore, I think that's, holding it and probably burning through savings since 2022 all the way till today just created a bigger hole in their pocket, nothing else. And it will continue to do so, right? So the biggest risk today isn't buying real estate, it's being unable to exit it. So this is a huge point. And I had personal situations where people said look, if I sell right now, I'm losing everything that I have maybe put down, right? I'm losing time, I'm losing equity, I'm losing everything, right? And if I do that, and if I go, and if I even want to buy something smaller, I can't because I don't have that equity. One, two, no banks will approve me, right? So everybody is just sitting like a duck on a field, just hoping that a miracle happens and that somehow they gain their equity back. And then one of my big questions was, look, if you could have exited in 2022, would you have done that? And 99.9% they said absolutely, right? Like I did not believe it, but now I realize that's the peak. And the second question is, I asked them in 2023 and 24, I said, what do you think? When will it start to bounce back? And majority of the time, at that time, the answer was like, you know what, next year, 2024, 2025 is the year, right? Like when I asked them today, they said like, look, we don't know. Could be 2027, could be 2028. I personally believe it's like nothing major will happen until 2030, to be honest with you, and we'll see the market continue to decline steadily, but we'll see, I guess. So 5 questions. In real estate, if real estate is safe, why does owning it feel more stressful every year? Well, you know what, like that's a great question. I'm gonna answer it like this. I think that it's a never-ending story. So let me explain. When you get a mortgage, when you buy a property, you finally decide you want to buy, you don't have cash, you get that mortgage and all of that stuff. You have the amortization, right? Could be 25 years, could be 30, could be 35, right? Whatever. But the actual term could be up to 5 years long. So it feels like every time you're fighting that term, right? So within that term of, let's say, 5 years of locked mortgage and rate, you're basically paying mostly your interest rates and then whatever from your credit, like it's a smaller percentage. But by the time you're done with the 5 years, it almost feels like you haven't done anything, and then you reset, and then God only knows what you will reset it to, right? Could be more, could be less, right? Like could be all of the above. You might not be approved, right? Like we don't know, right? Like it could go sideways. So that's what I'm saying. Like the luck of I would say situations from 2000 and onwards was that interest rates kept declining and real estate prices kept climbing up. And then we had the investors. We were in the growth mode. We were building towns and cities around Toronto, and we were exploding. I mean, like, do you guys even remember Milton? I mean, you guys locally here know, right? Like Milton, like in the early 2000s was farm fields. Like farm, that's it, right? So now like it's like thousands and thousands of homes, right? Woodstock, like who remembers Woodstock, right? Like just driving on 401, you don't even know that town existed in the early 2000s. It was obviously there, but like it grew, like it became on the map. And things like, Stony Creek and I don't know, like there's so many little towns all over the place, right? Like Vaughan. Think about that, Vaughan, driving 400 north, like that. Like it was like, are you kidding me right now? Like there's so much happening in Vaughan, right? So there's just something that I think over time, doesn't matter what you do, it feels like that you're not getting ahead, and you keep getting trapped into that mortgage term. And in other countries, for example, as far as I understand, that in the United States is different. You buy, you have a term of 25 years, 30 years, you lock in your rate, you lock in everything. So as long as you don't sell, that's your payment, that's your term. So by the end of that, 25 years or 30 years, then you paid it off. Very, very simple process. So I think that's something whether it's good, bad, like whatever, I have no idea, but it just feels like it. At what point does an asset stop being an asset? It's hard to say, to be honest with you. Like that's something that's very hard to say. I think an asset stops becoming an asset when you start using it like a bank. I think that's something then it becomes a bank, right? Like you keep borrowing against it, and that's it, right? So borrowing to buy something else, and then you're not even becoming a bank, then you're becoming a casino, because what if something happens on the other end? So it's becoming very complicated. I think buying a house to buy a house should be a priority. Done. Then moving forward, nothing wrong with buying an investment property for your kids down the road and stuff like that, but as long as it's stable, I feel nothing wrong with it, but I don't know, people got carried away with everything that was happening, and I don't know, we got to this point where we got to, and we will pay the price whether we like it or not. But I think this generation ahead of us, and this generation today, it'll be painful. It will be painful for them for sure. Is stability owning property or having financial flexibility? Depends. It depends. Like, I think for an average person, I think that buying that property with terms that used to be good, I guess, and with the stability that we used to have with employment, with maybe the country and everything else, I think it was safe because it didn't require any mathematical formulas or knowledge or anything like that. You knew, you buy, and hopefully one day you're gonna pay it off before you retire, and that's it, you're done, right? But if people have more know-how, I know people that made way more money in stocks, in crypto, in all kinds of different businesses, and made much bigger returns, right, than if they would invest that same money into, let's say, a property or a house or something like that. Would you buy your property today at today's rates and prices? I mentioned that in the video earlier. I think most people, especially these people, I had this conversation, like people from 60s, 70s, 80s, 90s or whatever. I said, hey, look, your house is worth 1.3. They're like, no, it's worth 1.7. I said, yes, 1.7 in the peak, 1.3 today, because today is the market value. Okay, fine. And then how much did you pay for it? 150, 130, 180, whatever the number is, right? So it's like 10x, 15x, or whatever the case is. Okay, fine, no problem. But they say, no, I want more. But then I asked them the same question: would you buy your own house at this price? And they said, like, are you crazy? Why would I do that? Who can afford this house at this price? So even those people, the older generation, which I sincerely respect, but they're like, oh my gosh, this is stupid, this is crazy. So I don't know. I hope I answered your question here, but it is what it is. Are you holding real estate because it makes sense or because you're afraid to admit it doesn't? Whew, this is a very powerful question. I don't know. I think it's a little bit of everything. I think there's an influence of the previous generation that they knew how to do only this, and they had success. They saw growth doing that. So obviously they're gonna teach what they know or what worked or works at that time. So the new generation now is kind of in that trap. They're holding it, let's say a property, they're holding a property, but they're like, it doesn't make any sense. Like, I'm paying $6,000 or $7,000 for a mortgage. I'm paying $10,000 in taxes annually. My utility bills are $500 a month. Like, I don't have a life. Like, wife and me and a child, if it's involved in the equation, like they're borrowing on their line of credits in order to survive. And yet the previous generation is telling them, no, don't, like, real estate always goes up, and listen to me, and this and that. I don't know. I think this is the mix up, right? Because they didn't experience. And I have been in some situations where I asked the older generation, I said, okay, hold on a second. You're judging, let's say, your child because they want to do something. Okay, fine. I agree. But you don't know what's going on deep down, right? So when I tell them, hey, look, your child is paying $6,000 for a mortgage and they're paying $10,000 or near close to $10,000 in taxes and this and that, it's like, are they crazy? Well, that's the world today. Like, what do you think, right? So then they actually start to realize, and I think the younger generation, without being disrespectful, but sometimes it's good to tell your elders or your family what you might be going through or what's going on, because most of the time they don't understand, right? Like, it's just tell them, hey, look, it's hard and this is my situation, and if you want to sit down and talk about it, let's do it together, but don't judge me on something that you don't know. So I think both sides are kind of at fault. The younger generation doesn't want to disclose, and the older generation maybe doesn't know. So it is what it is. So I hope you enjoyed this video. You got something out of this video. So please share, like, subscribe, and I'll see you in the next one.